beginning to shift from saving the financial system, which I guess they think has been done already, to fixing it for the long haul. And Geithner is proposing boosting the government's role in the economy in two key ways. Tonight, Obama is expected to bring those messages home. He's going to be talking about principles that are going to be carried to London by the President on April 2nd for the group of 20 leading nations where financial regulation reform will be a major topic. Speaking of the G20 meeting tomorrow, we're going to be talking about a list of security concerns that has been distributed to offices and tenants in office buildings in downtown London where the meeting is going to be held. It's very interesting. Some news coming from downtown financial London. Lloyd's has announced that its profits halved in 2008 to £1.9 billion. It does, however, describe the results as a solid performance in challenging economic times. The society insisted that it was still in a strong capital position and was continuing to focus on underwriting discipline. It also claimed that its combined ratio of 91.3%, while it did increase from 84%, was better than anywhere else in the world. It said that the ratio beat the estimated average of 101% for U.S. P&C insurers and 102% for U.S. reinsurers and 92% for Bermudian insurers and reinsurers. Lord Levine, the Lloyd's chairman, said amidst the unprecedented slump in the world economy, Lloyd's remains in good shape. Lloyd's indicated that they do expect a gloomy investment return for all of 2009, but nevertheless they do anticipate making money. We've spoken about this in the past, and yesterday there was a very detailed article in the Wall Street Journal concerning AIG. The federal bailout of insurance giant AIG, which of course was designed to stabilize the financial markets, is roiling another corner of the corporate world. The Wall Street Journal reports that AIG's competitors claim the insurer's federal lifeline is unfairly tilting the commercial insurance playing field, and they're pressing federal officials to crack down. In a meeting earlier this month in New York, some of the competitors of AIG complained directly to Mr. Bernanke. They urged him to prevent AIG from using the government rescue to win advantage, particularly by cutting insurance costs. Bernanke said he would look into it. In the 6 months since the government stepped in, AIG at times has slashed insurance prices by more than 30% in some cases to win contracts. The tack has helped AIG insure customers ranging from the U.S. Olympic Committee and an Arizona airport to an Illinois nursing home and a Florida town government. State insurance regulators in New York and Pennsylvania are investigating, as is the Government Accountability Office. The GAO said that insurance regulators, brokers, and buyers say that AIG may be pricing somewhat more aggressively than in the past in order to retain business, but the pricing did not appear to be inadequate. John Doyle, a top executive at AIG, attributes some of the complaints to, quote, frustration from competitors who in the middle of September thought that we were going away. Long-term critic of AIG's pricing policies of late, Edmund Ted Kelly, the CEO at Liberty Mutual, said that AIG continues to be overly aggressive on pricing and that you need to have an implicit federal backstop in order to do that. AIG says that Mr. Kelly's allegations are simply untrue. AIG had a 6.5% share of the U.S. market last year, down from a 7.3% share in 2007, but AIG remains the number 2 player in the U.S. commercial market field. It's a very detailed article in the Wall Street Journal. If you go to Google News and type in AIG, Wall Street Journal, and competitors, you will get it. I encourage you to read it. The reporters did a very good job. We'll leave the reinsurance terrain for a minute and go to this man. You may not recognize him as he checks his cell phone with his one good arm. That, of course, is Lance Armstrong. His manager says that he is confident that Mr. Armstrong's broken collarbone will not prevent him from taking part in the Tour de France. He says that the broken collarbone in March does not mean that the cyclist will not be ready for the Tour in July. Armstrong stayed at the manager's house in Madrid last night before flying out to the U.S. today for possible surgery. Armstrong broke his collarbone yesterday after a pileup in the first stage of the Tour de Spain in Castilla. Good luck to Mr. Armstrong. Stock market continues to remain down about 45 points. We'll go to a word from our sponsors and come back with the rest of the news.